You need to be trading gold during a session, because if you're not, you are literally missing out on so many opportunities to make so much money trading in the markets. Let's just get straight into the 6 risk reward trade that I caught on gold longs off a 30-minute demand setup. So this was during a session yesterday, okay? And this is a set and forget setup, right? So from an A and A plus setup, so you guys know I just set and forget the trade. I don't micromanage my trades. I don't take partials. A lot of traders online take partials and they do all this BSing. I don't do none of that. We just cut straight to the chase. I'm setting my entry, setting my stop loss, setting my TP, and TPing everything off at my 1 TP, right? I used to trade partials, but not anymore. So let's just get straight into it. So this is just a setup on the 30-minute demand. I basically refined this, like I tell you guys all the time on a higher time frame, refine it to the sell to buy. So that's what I did here. Refine the 30-minute demand here to sell to buy. Now, why was I bullish in the first place on gold? Let me tell you guys why. Let's go on it. First off, we can go on the daily. First off, the daily is bullish, right? Okay, daily is clearly going to the upside. Use the method. This is the easiest method to determine external trend. Is price going to the top right of your monitor or bottom right? If it's top right, it's bullish. If it's bottom right, it's bearish. Next, we mitigated daily demand. So I had that in mind. We already mitigated daily demand and we already took out 4-hour liquidity on the left. So when I go to something like the 30-minute, for example, right, which is the time frame I was looking at for my POI here on my demand setup, what do I see here? We had a 1-hour supply that we tapped into. If we were truly bearish, we should have dumped here off this 1-hour supply. And when I say dump, what I mean, as in we should have gone back to at least 50% here. We don't have to immediately go for a low here, but we should have at least gone down to 50% of this entire range here for a mitigation cycle. So a mitigation cycle for bearish price movement would be something like this, and then going for that low there. But guess what? We held this low here, obviously, and we did not even get close to 50% of the previous leg. So this on the higher time frame, remember, thinking time frames fractally, the fractal nature of the market is very important to understand. Even if we're on a lower time frame, it's something to keep in mind because this will improve your draw and liquidity win rate drastically, right? On the 1 hour, 30-minute, this is a manipulation lag that I teach you guys in the course all the time, right? This is what I call a fake reaction in the market, and it's not a true move that we're looking to seek as direction. So what is the direction here? Well, look what happened. So if we go to the 30-minute, which I think is most clear, right? Switch time frames until everything is clear. We have a breakout structure here to the upside as a continuation model. So this is my pro trend continuation model that I'm trading here off a 30-minute demand. That's all it is, right? You know, we came down here, reacted off 1 hour supply. If we wanted to go lower, we should have held this origin here on the 5-minute and continue lower. But guys, look what happened, guys. We came back here, which is, you know, a-okay, right? We can have another fractal mitigation cycle here to go lower, but guess what? No, we came down here and we immediately broke this high here. Once we broke that high, it was over. Because once this high gets taken out here, after we already mitigated the last potential POI, I knew price is 100% basically going for that high. And that's what we did. So this is clear signs of external structure telling me we are going bullish, right? So then I went on a lower time frame, like I said, once I got my analysis on the higher time frame set, and I just look for my entry model. That's all it is. You know, entry models, a lot of people make them out to seem like they're super important. They are important, but to only an extent. Because without context, you're going to take all these entry models and you're going to have a much lower win rate, right? So if you want to trade a 65% win rate like me at 4 risk reward, you need to be putting context into your trades. Because last month, for example, I was able to average like a 70% win rate, and on streams, I'm averaging 70-75% win rates because I'm only taking really high quality setups. I'm avoiding counter trend setups as much as I can, and you know, you will know when you're counter trending. Trust me, because you will realize from the losses you're taking, and if you just go back in your trading history or record, you can clearly tell you're doing something wrong in terms of just taking bad quality trades, right? There's such thing as over trading, revenge trading, emotional trading, but there's also such thing as taking bad trades that are not good losses that will negatively affect your P&L. So right here, you know, what was my target here? Let's go over the target. The entry was my OB entry model that I teach you in the course. The target here is very clear. So this is my inducement that I marked out here, right? This is why we reacted like this. So when you see something like this, for example, when I'm in a trade, and let's say I saw this, right? I don't hesitate or care. The reason why is because I know this is a fake move in the market to trap people to sell, trying to go for this low here or go for a PY here. And look what happens. The market did a pump fake on those people that are trying to go short. It took them out, right? So people set and forget shorts here. It took them out with this high sweep here. So I knew this was inducement. I knew that we can get a reaction off inducement, which was a really nice reaction here, but that doesn't mean a high time frame trend is going lower, right? It's just a reaction in the market to generate more liquidity for people to basically buy it all up. And that's what I was a part of. I was a part of the right side of the market at the right time. So got my nice entry. Again, this is basically the 50% of the leg here of structure, right? We have a lot of imbalances. So theoretically, yes, I could have targeted this PY above. If we go to a different time frame, I would have refined this. You could probably use this 1 hour here. 4 hour, there's nothing there. So I probably would have used 30-minute or 1 hour there for the supply. And then you can also go to lower time frames to figure out which supply is better. But nonetheless, this was a target that I was looking for. This is already a 6 sword trade. I don't have to get too greedy and aim for the stars like all the way up here. Ideally, I would aim for those highs, but like I said, this was during an ADA session, set and forget. Potentially, we can get that true move during Nurek session. And, I'm not going to hold this trade for like probably 20 hours plus. So, TP there basically for that 6 reward. And, that's basically it for this trade recap. Hope you guys did learn a lot from this trade recap. If you guys want to trade with me or learn how I trade, join the free Discord and check out the 100 Sword course. And I'll see you guys in the next one. Peace.